which our next guest thinks will be a total contrast from his remarks at last year's conference, while still leaving open the possibility for more hikes if needed. Joining us this morning, former Fed Governor Randy Crossner and our own Steve Leisman, who had the Harker interview, wrapped up that conversation, made quite a bit of news. Randy, I guess what could be as hawkish as last year? How do you expect tomorrow to turn out?
Yeah, as you said, I think it's going to be completely different. Last year, inflation was rising. And they had pivoted from saying it was transitory to being the #1 priority. He ripped up the usual speech, made it much shorter, and said the same thing 8 times. Inflation is our priority. This year, he doesn't need to do that because they have made inflation the priority. They've raised rates really rapidly. Inflation has come down. And so I think we're going to pivot back to a more standard speech where they'll be talking about the prospects for the labor market, the prospects for inflation. He's already talked about how things are a little bit more balanced. They're getting close to being balanced. And so I think he's going to leave open the possibility of more increases, but it's going to be a very different speech than last year.
Steve, in your interview, Harker did say that the Fed would possibly cut interest rates sooner rather than later, but he didn't. He wouldn't answer if that was early 2024. He says we still need to see inflation move in the right direction. But curious what your read is.
I think you had it right there, Seema. I basically heard him say that if inflation comes down, we can cut interest rates. Not necessarily, though, in order to ease financial conditions. As you know, if inflation comes down and the nominal funds rate remains the same, the Fed is effectively tightening. And I don't think Patrick is somebody who wants to be doing that. You know, he said we've done enough here. We are restricted. We need to have restrictive policy in place for a while. The art in the science of monetary policy is how restrictive do you need to be? I don't know that the Fed absolutely knows that, except it has to kind of look out its window and see what's happening with the economy. Right now, you could make an argument that we seem to be able to have decent trend or above trend growth and bring inflation down. There's not actually a really good explanation for that, other than the fact that some of inflation ended up being sort of transitory. Some of it responded to Fed policy. Some of it may be winding down over time as fiscal policy runs off. But I think the Fed, and I think what Powell's going to say tomorrow is, we're in a place we can hang out and watch for a while. I don't think he has to lay down a major landmark policy speech as he did last year, because I think the outlook is much more uncertain as to what the Fed needs to do.
The other headline that Steve got out of Harker, Randy, was this notion that his contacts in his district are saying, hey, let's wait for the economy to absorb the hikes we've already gotten. Is that sort of what's leading you to what I guess we call the hardish landing?
Well, certainly they're the long and variable lags that Milton Friedman talked about 70 years ago, and we're still talking about those now. We certainly have raised rates very rapidly. We've seen very little impact on the labor market. And as Steve said, that's kind of unusual that we can kind of be where we are. Now, maybe we can have this immaculate disinflation. We've never really seen that before. That is, bring the inflation rate down substantially without the unemployment rate going up. But I think that over the next 6 to 9 months, we're going to see more of the impact of these interest rate increases. And exactly as Steve was talking about, it's the real rate that is the most important rate for investment decisions. That is the difference between the inflation rate and the interest rate. Interest rates have gone up significantly. The inflation rate has come down significantly. So the real hurdle rate for investment is up. And I think the Fed's going to hang tough for a while. They don't want to have something happen like happened in the late 1970s, early 1980s, where inflation came down, the Fed cut, inflation took off, and then they had to go to double-digit interest rates.